Our guest today, Vinod Karki, Senior VP Equity Research, ICICI Securities. Vinod, it's been a while, but thanks for taking the time out. Hope all is well.
All well, Neeraj. How are things at your end?
Touchwood. All okay, Vinod. Thanks for asking. And let's try and figure out if you believe, Vinod, since we are in the midst of the election season, whether post-election, if indeed the verdict is what the market is currently factoring in, would it make an impact on flows, on sentiment and more, or would it be status quo? Let's start off with that argument.
Yeah, so if you observe the market, once the state election results came and some of the opinion polls came, market has been kind of warming up to the idea that there's going to be more consolidation, maybe in terms of vote share, and the outcome will be favorable. So I don't think that will be a surprise. So some of that is, I think, getting baked into the stock prices already. But nevertheless, that's an expectation when if actually there is a strong mandate, then there is a chance of some bit of excitement in the market. It seems that the market has made some kind of up move on the expectation that we'll get a favorable mandate in this election. So to that extent, I think once the elections are out, and we have seen over the last several elections, the volatility in the markets on election day has been reducing significantly if we go from 2004, 9, 14, and that way. So I think election day volatility may not be very high if it is at par with the expectations. And beyond that, obviously, fundamentals will take over, how growth is panning out, what's the outlook for rates, and things like that.
Okay. Just wondering, I mean, the talk at the end of December, when the three state election verdicts came in, was that FPIs, which are waiting for the election verdict to come out in June or May, whatever, would prepone now because they would believe it's a shoe-in. The current dispensation is a shoe-in. We haven't quite seen that. And maybe other factors like the EM performance or the interest rate trajectories is to play here. But I'm still wondering, in your conversations with global clients, are they waiting for the election verdict to allocate money to India, or are there other reasons around it?
Well, if you see the actions of the FPIs over the last year and particularly over the last month or so when the March numbers were available for flows across sectors, one thing is coming out clearly that the FPIs are buying into, first of all, if you see the last year, they were more buyers of broader market than just the large caps. And even in the March month, we saw clear preference for domestic cyclicals over defensives, in fact. So, which tells me that FIIs overall are very bullish on the domestic facing economy stocks. So that's a reflection of their faith and their outlook towards the domestic economy. So, but to answer the question whether they're waiting or not, I mean, the action clearly speaks that they have been increasing allocation towards broader market, domestic facing economy stocks and things like that. So action speaks for itself. Obviously, there have been volatility in between when there are this expectation of rate cuts goes away and rate bond yields in the US rise. We have seen volatility around it, but overall, if you see over the last, I mean, I think I was just looking at some of my charts and I realized that this is probably the first instance where over a trailing 12-month basis, both DIIs and FIIs are, on a trailing 12-month basis are buyers of 20 billion odd in terms of stock. Usually they are at opposite, they are at opposite. If the FIIs are buying at 20, the DIIs would be lower, that kind of a thing. Somehow they are converging right now. So which is, I think, resulting in these valuations remaining high. And that can actually, if the political situation gets better, growth keeps coming in. And that could be one of the reasons to be a little worried, because if both these large players in the market continue to be buyers, then who's going to be the seller, So last year, what happened was the MFs and FPIs kept buying 20 billion odd